Good morning, everybody. Welcome to another Market Report brought to you by Mike Bjork. Today is Thursday, July 7th, and just a couple of items on the docket today. We'll start off with the ADP employment for the month of June. This is kind of private numbers that ADP sends out there. This is kind of our prelude to the Bureau of Labor statistics numbers that we'll get tomorrow, this short week. So typically we would get this on a Wednesday, but because it's short week, they're kind of giving it out to us today. So the last reading was 168,000 new jobs created in the month of May. But remember, the Bureau of Labor Statistics came out with, I think it was like 38,000 jobs. So it's real disappointing. So pretty far off difference there. That's why this doesn't have a real high impact on what the market is, because it's not always in line with what the Bureau of Labor Statistics reports. But for the month of June, it increased a little bit to 172,000. But on the weekly jobless claims for last week, the previous reporting was 270,000 people applying for unemployment. Forecast was to dip down to 265 a little bit, and it dipped down further, 254,000. So last week, only 254,000 people applied for unemployment, which is a little bit better, obviously, than the previous weeks. Stock market's up a little bit, so they kind of like the reporting that came out there, even though the Brexit is still on their back of their minds. But they're kind of figuring, okay, it hasn't really affected us here domestically, and we'll kind of wait and see. It seems like the attitude now is wait and see if we're getting good numbers here, and Brexit maybe it's not as bad and it's not going to affect us. So there's a lot of uncertainty. So once there's a bad report, and then they're going to probably figure, okay, maybe that's the Brexit, due to the Brexit or whatnot. So a lot of uncertainty. Expect a lot of uncertainty, and a lot of anxiety amongst the investors of volatility probably over the next year or two here. Okay, so let's take a look here at the bond market. We didn't get a price reduction, but most likely we will have that priced in today. So we had a bit of a drop yesterday. Today we're down a little bit further. As you can see, we even touched the floor here at about 9 basis points. Currently about 6 basis points lower than when we left off. So from yesterday where we started, we basically would be priced for the worst today. We are touching this, which used to be the ceiling, now is the floor. So if we can keep above this, we could potentially go up higher, but we don't want to test this too much, primarily because it could, give us a downward trend, which of course we like the better rates, and want to keep this high as possible here. All right, folks. So today rates, I would say, worsened a little bit from where we started off the day yesterday, as a result. All right, so be careful tomorrow. We do got the labor board giving out their stats for the job numbers tomorrow, so that will be the big news item for the day tomorrow. All right, have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Bye bye.